Welcome back to the channel, everyone. Let's dive straight into our market analysis for February 2026. If you've been wondering what to sell or trim this month, you're in the right place. We are seeing some major shifts, so let's break down where the risk is and where you might want to take some profits off the table. First up, overvalued global software and SaaS stocks. The tech sector is going through a sharp correction, and those high-flying software companies with massive valuations are feeling the heat. We are hearing warnings from industry leaders that mature software companies trading at 30 or 40 times earnings is just not sustainable. The real culprit here is what some are calling SaaS rot. The fear is that rapid AI advancements, like the powerful new automation tools from Anthropic, are about to seriously disrupt traditional software business models. So, if you're sitting on big gains in this space, it might be time to reevaluate. Next, let's talk about speculative tech and semiconductor stocks. This is a classic sign of a market top. Even companies with fantastic earnings are seeing their stock prices fall. Take AMD, for example. They beat their earnings estimates, which is great news, right? But the stock still dropped by double digits because they didn't beat the unofficial whisper numbers by a wide enough margin. When good news can't even lift a stock, it's a huge red flag that market expectations have become completely unrealistic and a pullback is likely. Now, let's move to precious metals, gold and silver. For many, these are long-term holds, but February looks like a prime opportunity for some tactical profit-taking. We just saw both metals hit incredible record highs. Gold reached $5,600 an ounce and silver hit $120 an ounce. But what happened right after? A massive crash of 10 to 20% in just a few days. This kind of volatility is a signal to maybe skim some of that cream off the top and lock in those gains before another potential drop. Finally, let's look at alternative assets, specifically commercial real estate. It's a mixed bag here. Traditional office buildings and retail spaces are really struggling. They're facing a serious liquidity squeeze thanks to high interest rates and a huge wave of upcoming refinancing. This is a tough spot. However, it's not all bad news. There are bright spots in the sector. Infrastructure is looking very strong. Think about data centers and renewable energy projects. The AI trade is shifting from pure hype to infrastructure build-out. Companies like Micron and Broadcom provide the plumbing, memory, and networking that data centers desperately need right now. Corporate spending on security remains non-discretionary. They must spend it. Recent earnings beats of Palo Alto Networks and Scalar confirm that demand here is immune to broader economic slowing. After lagging in 2025, Amazon is primed for a comeback in 2026. AWS, cloud, is accelerating, and efficiency measures in its retail arm are finally paying off, widening profit margins. Bloom Energy makes solid oxide fuel cells that allow data centers to generate their own power on site, bypassing the congested grid. This is a favorite pick and shovel play for the AI infrastructure build-out. These specific companies have received strong buy ratings or have been highlighted by major firms, like Morningstar or Motley Fool, this month due to strong earnings visibility. These assets provide steady income and a good hedge against inflation, making them a smart place to rebalance if you're looking to move away from those struggling office REITs. So to recap, consider trimming overvalued SaaS, speculative tech, and taking some profits in gold and silver. And be very selective with commercial real estate, favoring infrastructure and data centers over traditional office and retail. As always, do your own research, but hopefully this gives you a solid starting point for navigating the markets this month. Thanks for watching, and don't forget to like and subscribe for more updates.